What is up, guys? Welcome to Trinity Trading YouTube channel. My name is Derek, for you guys who don't know me. This is going to be the first video that I'm posting up of me personally. I've already posted up a few videos that I've done, but this one's actually going to show my face so you guys can see me. Alright, so the purpose of this channel, I just want to throw out content out there for you guys. So I'm going to be doing videos of charts, winning trades, losing trades. I'm going to be covering risk management. I'm going to be covering psychology, fibs, Elliott waves, wave theory, numbers theory, price action, candlestick analysis, support resistance, supply and demand zones, everything you can think of. Alright? So we're just going to get directly into it. Please subscribe to the YouTube channel. I just started today. I'm not used to doing stuff like this, but I want to continue to do it because I want to give back to you guys. You can follow my Instagram page, TrinityFX, Trinity.fx, period FX. And if you guys have any questions, just message me directly and we'll see what we can work out. Or if you have any comments, please leave the comments down below. If you guys like the video, subscribe, tell your friends, post comments. Let's get it going. Alright, so we're going to go directly into it. I'm assuming anybody who's on this page already know what Forex is. So if you already know what Forex is, that's great. If not, then we're going to talk about it. So you guys can understand what Forex is and things like that. So I'm going to go directly into this trade that I did. This trade I called out a few days ago. And as you can see, this is just a long short position. I'm going to go directly into it. This is the sell position that I had. EURUSD sell 14160. 14160 was my entry. Stop loss 14400. Did not touch it. Why did I place it there? Right above this wick area, pretty much. And I typically do stop losses 25 to 30 pips above my entry. That's just how I always do it. So 25, 30 pips above my entry is what I like, is how I like it. And that's what it did. So if we go in and see what price did here. Let me just move this up. Let's erase this. So within, let me see if I can move this. So if you guys know anything about patterns, you know this is just a head and shoulder. It's a variation, but it's still a head and shoulder variation. You know, I'm very big on price action, just understanding price, patterns, candlestick patterns, supply and demand zones, and just overall downtrend and uptrend and just structure analysis. So I'm just going to show you how I did this from the beginning so you guys can get it. You know, I don't really want to erase this completely, but it's fine. It doesn't matter. We'll start from here so you guys can see what I did. So the way that I analyze a chart, I go directly to where price is currently at. So if we go here, this is off the weekly chart. You can even use monthly if you like, just depending on what you like. Weekly, I like weekly. So if we're going to do this based off supply and demand zone, if you do a supply and demand zone, the proper way to do a supply and demand zone is based off the resistance. You do it off the bearish open, drag it to support open, bullish open. Okay, so from here to here is your supply and demand zone for that area. So that's it. So once price touched this area, we saw clear rejection. And even if we go through time, I'm not going to go all the way back. I like to do it where price is relative. Resistance, support, 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 support. You understand that? This did not break through it. You have to understand that when it comes to price, support's just not a number, it's a range. So this range is a little bit bigger. So price just overlapped this ply zone, pretty much. Okay? And that's what it did. So based off the weekly, we get that zone. So now, understanding price action, this candle right here is a big indicator of what's about to happen. I see longs coming up, and you can tell that's longs going to come up. Because this is a bullish hammer, so just think about it. Bullish hammers means, it's kind of like a pin bar. If you guys know what a pin bar is, it's just clear rejection towards the downside. So price is coming down, one touch, two touch. So the same thing that happened here, massive pin bar rejection to shoot towards the top side, is the same thing that's going to happen here. It's going to come down. It's going to probably come down a little bit more to my TP area, which is about 113. I see it coming down to about this area, 113, and then shooting up. So I'm looking for longs this week. EU is going to be longs this week. So that's what we're looking for this week. So then again, very simple. Pin bar rejection, this is off the weekly, shot towards the top side, came back down, touched the same zone. It's a double bottom, clear rejection. So 1, 2 touch, going to push up. This engulfed this body. It did not engulf the wick, but it did engulf the body. So just think about this like this. So this candle right here looks like this. This is what this looks like. This is the shooting star variation. Even though it occurred on a low, it still shot up, rejected it, low turned high, pushed it back down. That's why you see major push towards the downside and then rejection towards the upside. Okay, so now since we saw this, even though it's still on a downtrend, you have to understand there's still a lot of bearish momentum pushing towards the downside. So since there's still bearish momentum pushing towards the downside, price needs to fill the candle, it needs to fill the wick. So that's what it did here. It's filling the candle and it's filling the wick. You know? So now that we're at this point, we understand that this upcoming week are looking for buys. But even though that happened on that time frame, if we understand just proper structure analysis, that's on the weekly. You understand this. Even on the weekly, it still did not break structure. That's why price rejected off of it. Now, I know it's going to be longs because I understand price action, I understand candlestick analysis, and this candle's major rejection. So it will come up. This week, it is going to be bullish. But understanding that, you have to keep account of what's currently happening in the market. So that's probably always the hardest part when it comes to trading. Like, you have to be aware of every time frame. You have to be aware of every time frame. You have to be aware of what H4 is trending, what daily is trending, what weekly is trending, what monthly is trending, what's H1, M30, M15, depending on how you're trading. You know, I'm an intraday trader. That's how I like to trade. I'm getting into swing trading now. Like, this trade, I'm going to swing it because it's just clear as day. So, very simple. If you wanted to buy it, you buy it here where you put your stop loss, right below this wick. That's it. Very simple. So, if I put a 0.2, the most I'm risking is $400, but to possibly make... Let's do some math from here to here. 4 times 2. I'm risking maybe $200 to $400 to make about $800 to $1,600 in about 3 weeks. You know, it's not too bad. If that's on a 0.2, if you use a standard, then you know it's $4,000. You're risking $1,000 to make about $4,000, etc., etc. You can do the math. But at this point right here, we see a few things. So if we go to the daily, the reason how we know it's going to start pushing towards the top side as well, because price broke through this range. You know, it was creating lower high, so just let's look at it. Lower high, lower high, lower high, lower low, lower low, lower low, lower low, lower low. What? This right here is still a lower high area. What happened at this point? Broke right through it, came back, touched the newfound high. Once it touched the newfound high, price is now coming back down to do an exhaustion to trend once again. You know, so the type of pattern that we're looking for here, what is it called, guys? It's called a inverted head and shoulders. That's what we're looking at. So this is an inverted head and shoulders that we're looking at right now. So this is the pattern that I'm looking at. This is the pattern that I like to see, you know, for EU playing out. So then that's just one thing. That's just basic candlestick analysis. So then if we do top-down analysis as well, we see price is bouncing off a strong supply and demand zone. Look where price rejected. This is a wick. So if you look on the weekly, it's basically a wick. So wick, wick, wick entry. When it comes to that, when it comes to seeing how candles form and finding head and shoulders and inverted head and shoulders, once you have 3 back-to-back candles, like, let me show you. Oh, let me show you. So right here is inverted head and shoulders too. Left head, right shoulder. Alright? Typically the right shoulder is where you want to enter. So if you're going on a typical head and shoulder, you want to enter on the right shoulder. If you're doing an inverted head and shoulder, you want to enter on the right shoulder. Once it comes back down and fills that wick. So right now it's coming back down to fill the wick. About this area, maybe even come a little bit lower to 70.7, 78.6, and then shoot up towards the top side. Point is, you're going to create a higher low. I don't see this price going below here. Honestly, I don't see price going below that point. I highly doubt that it will. Yeah, I don't see price going below this point because this is a structure point low. You know, that's a structure point low, and this is where price rejected off of. So everybody's stop losses is about right here. You know, I'm looking for it to come about to this area, and then my stop loss is below here. So I'm looking for longs to occur right now. You know, understand that it's still, I had sell since up here, like you guys saw in the beginning. I had sell since up here. And the reason why you know it's going to be sells, since that point, again, because it came back up, touched this area, and my understanding of price action, I knew price had to fill the wick. And it's still on an overall downtrend. Price has not broken any highs. Even though you see this massive bullish engulfing, if this bullish engulfing engulfed this wick all the way up here, then I would say it broke the high. It will never even make this run. It will just go and just bounce right up. But it didn't. It didn't engulf the wick. So since it didn't engulf the wick, it needs to come back down, fill that bullish hammer candle. So right now, if we're looking at what happened, again, if you just do simple trend lines, price is entering, hitting that buy zone now. You know, sell zone, buy zone. Everything below the trend line is a sell zone. Everything above the trend line is a buy zone. So if you guys like understand what I'm saying, I'm using a bunch of different style of technical analysis, chart pattern analysis, trend analysis. I'm using a bunch of different variety of stuff to give you these answers. But price is going to come down, form an inverted head and shoulders, touch the structure point low around this area. Wait for that H1, minimum H1. Wait for that H1 or H2, or specifically H4. If you really want to wait for that H4 bullish candle and then shoot up. Because this is what price will do. Price is going to come down and then come down one more time. You don't wait for the first push. You don't want to be in the first push. You want to be in the second push. So the second push is what you want. Why? Because this is on a downtrend right now. Look at what it's forming. It's forming lower highs. Understand? So at that being said, the reason why we entered sells at this point, because lower highs were still being formed. We understand the lower highs were still being formed. We get that part. Right? We get that lower highs are still being formed. Pretty much what gave it away was this break of structure at this point right here. So once this broke this low, we already knew it was going down, guys. We already knew. And then if we measure it from top to high, if measuring for a sell, high to low, came back up, wicked 61.8, which if you look across is a zone in the market, is a high structure point zone. And even if we just look across, even if we look across even more, you know, low turned low, turned high, turned high, turned high, turned low. Look where the wicks are at. Turned low, turned high, turned high, turned low. These wicks could have come lower, but they couldn't because it couldn't break this price point. Came back up, wicked it. Once it wicked it, it just then shot down. Created a double top. Also a head and shoulders on a smaller time frame. Left head, right shoulder. How do I know that? Because it's just my eyes are just kind of tuned to it. Wicks, left, head, right shoulder. Shot down. That's all. You know, that was simple. That was not complicated at all. That's simple understanding of how the market moves. Left head, right shoulder. On H2, we can clearly see it. H1, we should be able to clearly see it even further. Respected this high. You can also call it a triple top. 1 touch, 2 touch, 3 touch. Shot down. And then completely shot down. So what do I see here doing now? Price needs to come down a little bit further down. It's still bearish. Price needs to come down a little bit more to then make its bullish rounds. You know, so depending on what price does Sunday. If price comes down here, what do? We'll buy it to then sell it to then buy it. If price gaps up, we're selling it. Why are we selling it? Because it's still on overall downtrend. And price needs to make its second push. It's not going to push on the first one. So even if it gaps up here, we're going to sell it. And then it's going to make its push. Alright? But this was an easy setup. And I intraday traded. So now, like I said, understanding this, I love this candle right here. I see price pushing up. This is a bullish hammer. Like I'm telling you right now, this week is going to go up. Following this week into December, price is going to be so much more bullish than bearish for EURUSD. EURUSD. You could tell. You could just tell. Even off the monthly chart, you could tell the price is ranging in that area to just shoot towards the top side. Because look how this month might end. Let me just show you something. This month ends in a doji. If this month ends in a doji, this is the peak of that hammer. Alright? Understand this is the peak of the hammer. Okay? This is the peak of the hammer. So, if price ends in a doji, we're going to be looking for something like this. Morningstar variation to come towards the top side. Alright? That's what we're looking for. If price ends like that. If we go to the weekly time frame, understand this. That once price does that, going to come down here again. So the next monthly candle, we might even see the next monthly candle come here. So we might see this happen. I'm going to try to do this before time ends. We might see that happen as well, because this will be the new month. Next month is around the corner. Friday is the next month. So if by Friday it's up here, then we'll see a push down again. So then on the monthly chart, it wicks it down here and then shoots towards the top side. Alright guys, I'm going to let you go. This is my first video, my introduction video. I hope you guys liked it. EU longs this week. Swing it, hold it. I appreciate it. Thank you.